What can we expect from the actual communications out of this week, and will upbeat language actually help the market at all?
I think less committal is probably an apt way to define what these talks have been thus far. And if you carefully look at the positive language coming out of Washington, it actually gives you a sense that not much has really been agreed to. And both sides this week are going to be furiously working to complete what we think will be something like a memorandum of understanding, some kind of framework that will set forth how the two sides are going to make onward progress should there be an extension of, I think what is reported is about 60 days. But let's be clear, Vani, if Beijing is not able to come forth to the table, is not incentivized enough to come forth to the table within this 90 days to offer the concessions that Washington has been consistently asking for, that it's highly unlikely we're going to see significant progress in an onward 60 days. And this is likely the argument that USTR Lighthizer is making to the president. Look, if you're going to grant an extension, fine. Let's see what the Chinese come to the table with. But it's unlikely that they're going to come with the kind of concessions that Washington is looking for unless they experience more fundamental economic pain. And that's why Lighthizer is basically saying to the president, if we're not going to get the deal that we're looking for, we're going to have to move to an increase of tariffs. The Eurasia Group call, though, is that we're unlikely to see those tariffs on March 2nd. We do think that there will be an extension. We're placing about a 60% probability on that.
Meredith, good morning. There was a lot of chatter overnight that the PBOC is preparing to cut rates. If it were to do so, would that be a signal that the Chinese are taking a harder line? They are looking to protect their economy?
I wouldn't say it's a signal that China is looking to take a harder line. It's more so that China, and really we've seen this for the past several months, actually over the past year, that China is cognizant of its slowing economy, and it's confident that it has the necessary tools at its disposal to be able to mitigate growth headwinds to its economy. So whether that's monetary policy, whether that's looking at tax breaks or other ways that you can get more funds to the private sector. Ultimately, whether those tools are going to be successful in helping China move through some of the harder reforms domestically that they need to undertake to lower debt levels while also being able to adequately juice the private sector, that's unlikely. But what we are seeing is an active PBOC that is looking to mitigate the pressure of the trade confrontation, as well as other headwinds that China's economy is undertaking. But let's be clear, Xi Jinping is comfortable with slowing growth in China so long as that economy is able to move towards more quality sources of growth.